This is Iberian Property Insights, an initiative aimed for those who want to be updated on the Iberian real estate sector. My name is Alexander Lima. When we look at the Iberian real estate sector, we see that Spain and Portugal move at different investment volume paces. And one of the sectors in which the gap is increased is logistics. To help me understand why, I have with me Reno Cardiff, an international partner, and Paulo Sarmento, head of Transactional Services, both from Cushman Wakefield, which will help us with some insights on the Spanish and Portuguese market, respectively. Welcome you both. Paulo, I'll start off by Portugal. What are the biggest challenges constraining investments in the country? Do we have projects in the pipeline? Is it a matter of land availability for new developments? And is there an investment demand which is consolidated?
Well, thank you very much for the invitation, Alexandre. Well, there's differences in size of the markets irrespective of asset class. So you are always going to see massive differences in terms of investment volumes between Portugal and Spain. The relationship will be 1-4, 1-5 on a typical year in terms of difference in volume. This is particularly evident in two sectors. One is residential, call it build to rent, PRS, whatever. And the other one is logistics. A few reasons behind this. Well, the occupational market, of course, is quite different. We are a peripheral country, so there's a lot of product that comes to Portugal and stops here. There's a lot of domestic logistics, so moving around goods between different places in Portugal. There's not a lot of assets coming through Portugal going somewhere else unless they're being shipped. So the size of the occupational market is smaller, but essentially, I think what we miss is not lack of investor appetite. We need adequate stock to trade. We have a particular situation from the onset of the great financial crisis of 2008 to 13. Logistics development was basically a business of local, small Portuguese entrepreneurs. Most of them went bankrupt during the great financial crisis. And then when we emerged out of that, logistics rents were just not high enough to justify developing logistics. I mean, if you factored in land costs, construction costs, rents, and yields, then the equation didn't make any sense. So we basically didn't have any sort of large-scale modern logistics development between 2009 and 2017. So what we were basically left with was an enormous amount of obsolete stock. That is not what the investors are looking at. So we had a lot of people knocking on our door asking for investment deals, but we simply didn't have modern specification facilities with good tenants, long leases, basically everything that the tenants, that the investors were asking for. This started to shift a little bit in 2017-18, and now finally we have a few large international developers that are very active and are building, state-of-the-art, large-scale logistics facilities in Portugal. The likes of VGP, Panattoni, Merlin, Aquila Capital, Montepino. All those guys are active. So hopefully, by the time these developments are actually built and leased, we will have more activity on the investment market. Unfortunately for the market, some of these developers are long-term holders too. So we don't expect them to trade these properties. We think they will rather keep them because it's the nature of their businesses. But some of them might actually decide to sell, and then we will have a more robust investment market. The notion that the investment market in Portugal may be smaller due to lack of investor appetite is wrong, and this is evidenced by the trading numbers in 2022. If you look at the trading numbers in 2021, they were quite limited. In 2022, we had a couple of large portfolios that came to the market, actually a very modest quality, but still enough to attract a lot of investor interest. So just to give an idea, the investment volume in logistics and industrial in 2022 in Portugal was 10 times the investment volume that we had in 2020 and 2021. And last year, because there were no such assets coming to the market, we went back to, figures which are closer to the ones we had in 2020 and 2021, despite very significant appetite from investors.
Very good opening and very interesting to see this renewal of the market and moving from obsolete assets to these big players being active in the country. Reno, from your side, from the Spanish country, fundamentals seem to be strong and last mile demand is always growing, mostly supported by the growth of e-commerce. Are the small cities prepared to assure an optimal distribution route? For example, sometimes I go into traffic and I usually go by motorcycle, and I'm very happy to go around the big traffic rush hours. But sometimes I see big trucks and I wonder, is urban congestion a problem in these big cities in Spain?
Interesting question, Alexandre, and again, thank you very much for the invitation to participate today. Perhaps let me answer it with three comments, using Madrid as an example. Clearly, last mile logistics is growing. If you look at the gross take-up last year in Madrid, in the Ring 1, it was about 60% of the total take-up for the city, which is interesting because if you look at the longer-term average, we've got about a 50% participation. So, demand is growing. Vacancy is below 10%. I think it's about 9.58%. And you're also right that e-commerce penetration is growing and is somewhere between 13 and 15%. I think what's quite interesting to note is that food retailing represents less than 5% of online sales. So in overall terms, clearly there is more pressure on the infrastructure in the city. That said, it was quite interesting. I read a report that was published by the Comunidad de Madrid back in 2022, and it confirmed, as you mentioned, an increase of about 20% over the past 10 years in heavy goods traffic. However, what was quite interesting as well, it said that the increase had been generally absorbed by the various highway networks, so the secondary, the primary, the principal, with the increase at less than 10% across the board. So I think at the same time, what we can't forget is that Madrid essentially is a multi-edge location for logistics, meaning to serve the city, you're likely to need multiple facilities, perhaps with some micro fulfillment centers in the CBD. So I think it is an issue that is growing, but for the time being, we seem to be able to alleviate that with the strong network that we have, road network in and around the city.
And another particularity that I usually wonder about is that these last mile logistic assets, well, they have this thing that the closer they are to the city center, sometimes the better it is. But for example, if we have a unit that is located next to a residential area, are the local municipalities imposing any difficulties in the approval of license to operate there? How easy it is to lock in this proximity to ensure a good distribution route? I don't know if you want to start.
Shall I start, or do you want to start?
Mm-hmm. Yeah, go ahead.
I think you'll tell me if I'm wrong, Paulo, but I think it's difficult to give a general answer. It depends at the end of the day. What we're seeing in the Spanish context is that if the permitted planning use of the land or site is logistics industrial, then in many cases, there is support for this type of development. However, we've also seen cases where the public sector is supporting the change of use. We've seen this in Madrid and Torrejón, for example. Or another example in Madrid would be Villaverde, where we've got a school adjacent to a development site. And again, we're seeing support by the public sector for a change of use. So I don't think there's any general rule. I think it depends on the characteristic idiosyncrasies of each property and specific needs in locations to support population growth.
Right. So if I have to speak about Portugal, I first thing I had to say is that we haven't seen a lot of development in terms of real edge of town last mile logistics. It's a lot of people talk about it, but the actual fact is we haven't seen a lot done. There are a few projects of we can call them last mile, but they are sort of more edge of town, like Loures, like IC19, Linha de Sintra, etc. You can see, but those are still, we wouldn't call them big box projects, but they're certainly not your sort of last mile capillary distribution center, which I think are the ones that you allude to in your question. We are facing a massive change now, as you know, in the Portuguese planning system with the approval of the new Simplex Urbanístico, which in theory would make change of use easier from a pure legal standpoint. Having said this, the experience that we have had in the past is that municipalities are usually quite wary of having logistics facilities very close to residential areas, and they usually don't like it that much. And we have actually seen instances in which despite the applicable planning to that particular parcel enabling the construction and development of logistics facilities, you know how strong municipalities feel about this, and sometimes they will tell you right to your face, I don't care if this supports the development of logistics. I don't want any logistics development near to this residential area. I will not be supporting this project in the municipality. So despite the fact that you have planning permission, you know that you are going up against a brick wall, and you certainly don't try that.
Out of curiosity, do you see this as being a challenge for upcoming sectors, like is the case of, I don't know, data centers or more infrastructure-related assets?
Maybe, but in this case, for the data center industry, namely, it's all about different things. It's all about fiber connectivity, and it's all about power. Yeah. So the right places for you to set up a data center. You have smaller scale data centers in the edge of towns. I can think of a few places in Lisbon, but that's also is all driven by the amount of energy which is available for those data centers to use. We don't have enough experience, or to be honest, in terms of people trying to get planning permission close to residential areas. There are a few already built close to residential areas, but in terms of recent activity, I cannot relate to any significant data points.
Yeah, and we could go on in a different route and be here about just about this topic.
I just echo what Paulo said. I mean, I think, looking at the data center development that, is taking place in Spain, particularly Madrid and Barcelona, more focus, I think, over the past few years on the Madrid market. But it's a question of, as Paulo said, power. And there seems to be, as one would understand, accept a limitation in terms of power moving forward. But very much agree with the comments made by Paulo.
Perfect. And getting back to our common warehouses, how do you see ESG striking this sector? Does the lack of available land sometimes lead to the need of demolish old warehouses to build new ones? What would you say is the frequency of this type of situation? And is rehabilitation something that really makes sense for the logistics sector?
Shall I start, Paulo? Or?
Absolutely.
I think, gentlemen, ESG is a completely different subject, which I hope we'll cover in a bit more detail as we move forward. But in terms of land availability, I think it's fair to say that industrial land is becoming scarce in urban locations. And clearly we're seeing an increase in service-based activities. Therefore, real estate strategies need to evolve. I think it's logical. I think we're seeing it, across Europe. I think it's also fair to say that to date, Madrid, given land availability, has been able to absorb much of the new development coming through. I mean, if I look at Ring 1 in 2023, we had another 100,000 square meters added of new build, essentially. And we're anticipating 2024, 2025, another 250,000 square meters. That said, I mean, this can't last forever. And I think it does make sense from a personal viewpoint to consider not just redevelopment, but also refurbishment. I think we're going to see a lot more refurbishment moving forward. I think particularly given land values and the ability to perhaps, fund future refurbishment on the back of existing income-producing stock, or perhaps a mixture of the two. And I think we're seeing it, for example, in Madrid with GLP and Villaverde. So I think it's a tendency or a trend, better said, that will continue as we move forward for obvious reasons. I mean, land is scarce or will become scarce in certain cities in the foreseeable future. Paulo.
Right. Well, concerning Portugal, we haven't seen a lot of rehabilitation of old warehouses to build new ones. Actually, if it's not just ESG, if you think about the whole set of technical specifications that modern occupiers and modern investors want for their facilities, it is very hard to find any sort of existing old obsolete stock that can be easily reconverted. So in 9 times out of 10, you need to tear the whole thing down and rebuild again, which, as you can imagine, is more expensive than just building it from scratch. So I think you may see in some instances, especially when you talk about more sort of edge of town, last mile, more capillary logistics, which has different, they still have the same ESG requirements, but in terms of technical requirements per se, can be a bit more flexible. You may see some refurbishment of existing facilities, but in the case of proper out-of-town logistics, large scale, again, 9 times out of 10, you'll see that being developed from scratch, because what is there in terms of existing stock is quite obsolete, and it's not convertible to address the needs of investors and occupiers in terms of specifications.
Perfect. And Paulo, picking up on the specifications and things
right
that require, what would be the non-negotiable for tenants and both investors for the new projects that are going to be launched in 2024, 2025? What would they value the most? Is it a matter of location, clear height, dimensions? I don't know.
Well, location is of course paramount, as it is for any other asset class in terms of real estate. And in the case of logistics, of course, visibility and especially accessibility are. So I'm talking basically about things which are external to the asset itself when I think about accessibility, right? If you look at the asset itself, then there's a few things which are becoming more important. One of them is clear height, and this is climbing very high. I mean, it's unthinkable to have anything with less than 10 meters clear height now. And with robotization and sort of multi-story warehousing, you will see easily clear heights jumping to 12, 15 meters and even more in some instances. Ideally, also build it in the way that you have a wide column span, which basically makes it much easier to store and transport and maneuver goods inside the facility. Natural ventilation, overhead doors with hydraulic dock levers. Outside space, very important for parking and maneuvering, no less than 30 to 35 meters of distance to the edge of the property. Stable, durable floor, obviously, skylights, insulation, lighting fixtures, all the ESG things, namely the battery charging area, the solar panels, and usually some sort of office area with a good specification. Office area usually takes less and less space, but tenants still require it, and they want it to have good technical features. So these would be, I think, the main technical specs that you would demand from a modern day facility.
No, same thing for Spain?
I'd agree with Paulo. What I would say is there's a clear movement towards quality accommodation in the logistics industrial market. I mean, if we look at the activity in both Madrid and Barcelona last year, we're seeing, I think it was over 70% of the activity was focused on Class A or B plus buildings. And if you compare that to the, activity, prior to the pandemic, it was, closer to 50%. So I think ESG is at the forefront, as Paulo said, not just for corporate requirements, but also I think for OPEX issues. I mean, we were looking at some refurbishment work recently and investing heavily in terms of upgrading logistics space, but at the same time, we were able to obtain a 29% reduction in terms of OPEX costs. So in line with what Paulo said, perhaps I'd also add fire protection, at least class 5 in the Spanish market. Clear height, I'd probably say 11 meters. Dock ratios, I think you probably need at least 1 to 800, if not better than that, and ample turning areas, but also at the same time, well-connected population infrastructure, which is important. People need to work in these places. So I think all these things, are important in terms of choosing the right location.
And interestingly, in terms of ESG, we tend to focus on environmental aspects, and sometimes we tend to neglect the ES and the G. And for example, we have instances in Portugal in which one developer is building a crèche next door to their new logistics facility, because there's so many people that are going to work there. A large part of that will be women, and in a lot of instances, getting manpower to operate these facilities is critical. So adding a crèche or some sort of other social offering in terms of being able to attract workers to go and work there is becoming increasingly important.
I agree. Good example to pick up on the other letters that so many times we forgot. And for a crystal ball question, more tricky, that is, what is your view or forecast on rents evolution? Do you expect to increase, remain the same? And are there any particular stressed locations where probably an imbalance of demand supply can justify the movements from rents? Reno, should we start?
I think we are, to a certain extent, looking into that crystal ball. But before I divulge our opinion, I think it's interesting to note that given this, as I mentioned before, increased focus on quality accommodation. I mean, average rents, if I take Madrid or Barcelona, have increased by about 50% over the past 5 years. So the average rents. I'm going to give you a general answer in terms of where we believe growth will be over the next 3 years, but it could vary on a sub-market specific location basis. We anticipate sustained occupier demand over the next few years. We were anticipating the downward adjustment in both Madrid and Barcelona last year, following significant growth over the past 3 to 4 years. And we're looking at, total growth as an average, as I said before, over the next 3 years of between, 6 to 8%, given the new supply coming into the market. Paulo, are you aligned with that?
Not too different. No, actually, no. The particular situation in Portugal is that we have very low vacancy rate. For example, Greater Lisbon, we have a vacancy rate of around 4%, which of course sustains very healthy levels of demand and puts pressure on rents. But again, as I mentioned, for the first time, we have a lot of developers building large-scale facilities, and sooner or later these will all come to the market. So, if this new supply would not come to the market, we would be very bullish on rental growth, especially, not only because we expect continued demand from new tenants, but also, as I mentioned, the existing stock is so obsolete and the demands of occupiers have increased so much that even just for the effect of having tenants leave the obsolete facilities and just relocate into modern facilities, you will see pressure on rents because, of course, these new facilities are much higher in terms of specs and quality, and of course can command higher rents. So again, an outlook which is quite positive, but assuming that so much new supply will be coming into the market in the next 3 years, we see a situation where we'll probably have moderate rental growth, a bit more pressure, of course, on the prime areas and on the best assets, a clear sort of two-tier market with obsolete assets suffering significantly in terms of rent and occupation, and the best assets commanding the higher rents and being fully occupied or close to that.
What I'd say, gentlemen, and again, Paulo, if you disagree, please let me know. We're giving you a general answer, or general opinion, better said. I think when you analyze, particularly Madrid or Barcelona, they're big markets. You need to look at a sub-market by sub-market basis and the demand-supply equilibrium, across those sub-markets. And I think we'll see more pressure in certain sub-markets than others at the end of the day. And going back to your previous question, we can't forget, if you're talking about refurbishment or redevelopment, that's a cost. All right. So therefore, the metrics have to stack up to make these things work. And you can do that in certain areas, other areas you can't, given land values and construction costs. So, straightforward, average general answer is fine, but I think, you've got to look in a bit more detail on a sub-market by sub-market basis.
Completely agreed.
Perfect. Yeah. And finally, in terms of investment activity, what should we expect for 2024 and maybe for the next couple of years with this new supply coming into the market? Will we be seeing large portfolio transactions taking place, or will we see an investment in line with what was 2023?
I think we're looking at that crystal ball again at the end of the day. Paulo, shall I start, or
Absolutely.
would you like?
Okay. Absolutely, go ahead.
If we look at the Spanish market, I don't think we can forget, I think it's important to recognize that the ownership structure in Spain is very dispersed. And I was actually doing some work over the past couple of weeks and reviewing, over the past 5 years, the 300 deals that took place in the market. Of these, I think about 14% have been, large portfolios, i.e. above 100 million, euros, or about 80% of the volume. I don't think we can forget at the same time, the investment backdrop. Clearly, my feeling is sentiment is improving, but there's still caution. I believe we'll see more activity towards the end of this year. What I'm hearing from investors, what we're doing in the market, leads me to believe there will be more interest. This is at least in the Spanish, and I believe the Portuguese context, an international market. I mean, our market is dominated by international players. So I think it's probable we will see more portfolio trades moving forward. I don't see it being the backbone of the market in terms of activity, but we're optimistic, regarding at least Q4, if not Q3 this year. But demand is returning, investment demand. Paulo.
Right. Well, in Portugal, as I mentioned, we have a specific situation whereby we have new large developments, but unfortunately for the market, some of the people behind them, they like to hold on to real estate, so they will probably not trade. So we every year when we start the year, we look at the deals which are currently taking place, and we look at the deals that will probably take place. And to be honest, we have not identified any large portfolio deals. That doesn't mean to say that they will not happen. But again, if you look at the existing stock and how obsolete it is on average, it will be hard to identify massive transactions. At the same time, we are coming out of a period of lower investment volumes due to very significant changes in interest rates and therefore in pricing. And also coming out of the situation where a lot of the international investors have been sort of waiting from the sidelines, and most of the transaction activity has been taken place by local, smaller domestic players, private offices, local pension funds, local open-ended funds. And this is unlikely to change in the first semester of this year. So, if you put together the fact that it will take a bit more time for the large investors to return fully blown to the market, and also to the fact that we don't see in the existing stock assets that will probably be transacted in large deals this year, we believe it will be a better year than last year, but still mostly a year of smaller deals done essentially by domestic players. And then maybe one of the large international developers is actually building on site, decides to sell their property. And in such case, we will see a large deal, not necessarily a portfolio deal, but still a large deal for the Portuguese market.
Going back to portfolios, we were looking at a portfolio over the past couple of months, which was quite a large portfolio in Madrid. And the idea behind that particular acquisition, at least from our side, was to acquire it and heavily refurbish the accommodation, upgrading the space, improving obviously ESG credentials, reducing the OPEX. And we felt in those sub-markets the demand and supply equilibrium was such that rental growth from quite a low level would be higher than the figures we talked about earlier. But it comes down, as I said before, I think as Paulo said, to a sub-market by sub-market basis.
And Reno, what type of investor profile do you see most active in the Spanish market?
Really, it's, as I mentioned before, it's international. There are a few national players, but I think the vast majority of the actors in this sector are international actors. So, what's going on in other European locations does influence in terms of both focus, but also pricing at the end of the day. So I don't think, it's just Spain and nothing else. I'm speaking to groups now that have been, at least for the past few months, focused on Northern Europe, but now feel that, it's the right time to look at Iberia. But essentially, it's a international market, and also a market that's heavily influenced by the ability and cost of funding. So all these things have a direct, impact in terms of liquidity, in terms of pricing, and obviously sentiment moving forward.
Perfect. Gentlemen, it was a pleasure to welcome you in this podcast. I think it was a very interesting discussion with the Cushman views to boost what was the Iberian property insights powered by Grupo Iberian.